I have 40 cal just sitting in the bank. This isn't the best place for it, right? I'm learning about money, but I'm essentially clueless. We have the money in leftover from our sale of our house 5 or so years ago. Since then, it's just been sitting in the bank. I'm sure that's stupid, but I'm not exactly sure what to do instead. I should be investing it or something of that nature, right? I'm assuming that it doesn't make sense to use it to pay on our current house or use it to pay off loans, but I don't know. It might not be stupid. If that money is in a high-yield savings account and it's your emergency fund, it's a perfectly fine and recommended strategy for your money. If it's just sitting in a bank account with nearly zero interest and you already have an emergency fund, yeah, you just lost out. Just to put it into some perspective, if you had invested 40,000 into the SP 500, VOO for instance, in 2019, you'd have about 70,000 right now. Ugh, that last part. You have to keep in mind that people thought COVID was going to throw us into a recession up until just recently, and even now the worry hasn't totally faded. It sucks, but I don't blame myself for throwing my entire savings into stocks at that time. Same here. I've kept most of my savings in a high-yield savings account since before COVID, and it's made about 4 to 5% since then. I know inflation outpaced my interest rate, and I could have made more by throwing it into the stock market, but it's been an insurance policy to me in that I won't lose any cash in a potential market crash. Not the best financial move, I know, but it doesn't bother me. Yeah, I did this too. I know I lost out, but Jay can't shake the feeling that things are screwy. The economy is like record profits, record spending, record stock highs, but everyone I know is struggling and either living on debt or postponing major life milestones because of money. How long before the lack of sustainability catches up with us? With my luck, it'll be the moment I invest my savings. I feel you on that. I'm very grateful to have been able to save a bunch during the pandemic, but I should have made my money work for me. It just sat in a savings account and has dwindled to oblivion now that student loan payments are back. I recently just bit the bullet and crushed my savings to wipe out my student loans with the money I saved during the pandemic. It hurt but feels good to never think about again. You made the right move. Onward and upward. That's a huge chunk of the monthly budget back under your control. Congrats. I did this about 5 years ago. It feels better and better every year. Financial hit, prob worth the extra peace of mind. Nice to have extra portion of paycheck not going to someone else but staying in your pocket. Proud of you. Massive dub. Div classroom removed. This has been removed for rule number 6 of our subreddit. We do not allow political commentary. If you use the historical definition, we were in a recession for a hot minute. They literally changed the definition to avoid saying that we hit a recession. Although I've been fairly insulated from all of it, besides grocery inflation and insane housing, it definitely feels like we rolled our rolling through recession light. That market do be pumping, though. We'd be out of it by now, even going by the standard historical definition. There were only 2 quarters together of contraction. Would have been over the following quarter anyway. It's sad that this is still a common perception. The NBR Business Cycle Dating Committee has long been the definitive source of recession dates. They didn't change any definition. businesscycleps.n.org/research business-cycle-dating/business cycle dating procedure frequently asked questions. .nmer.org/research business cycle dating procedure frequently asked questions. 30K over 5 years isn't exactly life-changing money. I mean, I'll take it. That would have covered a new roof and bathroom renovation. To each their own, alleged moneybags. Just to put it into some perspective, if you had invested 40,000 into the SP 500, VOO for instance, in 2019, you'd have about 70,000 right now. Let it be noted that a run like that only happens every 15 to 20 years. That was an insane run. If you look at the last 40 years, the majority of the gains occurred on less than 30 days of trading. The time you are in the market matters a lot. You need to be in when the big rally occurs. Also, many of the best days happened in bear markets. Between 1993 and 2022, if you missed the best 30 days, then you missed over 80% of the market gain. Yep. I was transferring from Vanguard to a new broker, and it took 10 days for the check to arrive and then be processed. In those 10 days, I lost out on several of the best days of 2023, where if I'd stayed at Vanguard where I was invested in an S&P 500 index fund, I'd be up about 50K. That hurt. It is on the higher side, but it's still important to note that regardless of how unlikely it was, it still happened, and not getting those gains happened. That's like 14% scatter. Doesn't seem terribly insane. And as a caveat to the whole rule of only keeping emergency funds in cash equivalent and the rest in VOO, any large purchases in the near future should be kept in a HISA ladder as well on top of emergency funds. For example, if you're saving for a down payment on a house in the next 3 years, saving to buy a $70,000 car outright in the next year, etc. If that money is in a high-yield savings account. For the past 1 to 2 years, it would have helped, but before then, I don't think there were any high-yield savings accounts around. Edit, with high rates. CDs were less than 1% as well. HISA have been around for a while, but the real yields didn't happen until recently. I have a good chunk sitting in one while I wait for a housing correction, as most will be zapped up into a down payment, making better financial options too risky for my intentions. What is SP 500 and VOO? Does it 100% guarantee that return, or there's a chance to lose money? Nothing is 100% guarantee in life, and it depends on your time horizon. The more stable and the lower the risk, the lower the return. I recommend reading the book A Simple Path to Wealth. It will improve your life. The S&P 500 is essentially a collection of the top 500 companies in the U.S. There are a lot of different funds that invest in all 500 of those companies. VOO is Vanguard's S&P 500 ETF. I use VOO as an example because I happen to like Vanguard ETFs and I like investing in the S&P 500. However, most large brokerage firms have their own version of VOO as an ETF, mutual fund, etc. There is no guarantee in anything, and economic collapse will obviously ruin everything. VOO is considered safe because unlike purchasing stock in one company, VOO comprises of a small amount of stock in all 500 companies in the S&P 500. It's not even across the board though, and the percent distribution between the 500 companies is one of the major differences between the different funds. What's the latest recommended HISA? Depends on you, I guess. You can pretty easily just chase the highest percent out there and go with them. Me personally, since only my emergency fund is in a HISA, I have it all in Goldman Sachs. I use the Apple HISA. It has a 4.5% return, so you can find a little better, but I'm willing to sacrifice that small amount for convenience of the platform. Thank you. Since it's your emergency fund, it's basically just like a regular bank account. Or does it have restrictions on withdrawals? It has restrictions. It's not a checking account, so I can't write checks, and it takes me a couple of days to move money around. But other than that, it functions just like a regular saving account. An added perk is how it integrates with Apple Cash Pay. I have $57,000 in a Capital One 360 savings account. Interest is at 4.35% right now. I'm getting about $200 a month in interest right now a month. Is 4.75 to 5% considered nearly zero interest? No, that would be considered reasonable for a HISA, and almost as much as you're likely to get with virtually no risk. You can and should do better with minimal risk, especially over the long term, but if you need reliable access to the money and basically no chance it will go down short of society collapsing or something, that's quite reasonable. How much more would you have investing it in Bitcoin at the peak in 2019? I have some cash in a high-yield savings and it's emergency cash. But it's a joke that high-yield savings is what it is. You can also open a Fidelity brokerage account and transfer the cash there. Your uninvested cash will automatically get put into SPACX, which is at 5% right now. Plus, you can move the money or invest it whenever you want. Alternatively, if you already have a brokerage account, you can invest it in a short-term money market fund like BIL, which is about 5% as well. You get a better interest rate than a savings account. I got a money market at 5%, and if I need a chunk of change, I can have cash in hand within 2 days. What is the risk in doing this? Can I pay my mortgage from one of these accounts? There is always some risk when opening a brokerage account and investing. That being said, the default core position SPACX is a government money market fund, which basically takes your money and buys government treasury notes and repurchase agreements. So it's backed by government securities. It's very low risk compared to investing in pretty much anything else. SPACX is 5% right now because the government rates are even higher to combat inflation. But SPACX over the last 5 years is more around 1.6 cent. Edit, and yes, you can set up your brokerage account to pay your mortgage, e.g. for Fidelity using bill pay. I guess a better question is, could I lose money with government securities? In my mind, the answer is generally no, right? That would be the equivalent of the dollar not being worth a dollar. It is very, very unlikely. If that happens, we have bigger problems. They can also just skip the brokerage account and open the Fidelity cash management account. You can take the money and throw it into SPACX there as well. You just have to manually move in your deposits. However, dividend interest earned is automatically reinvested. The CMA is auto-liquidating, can bill pay from it, you get a debit card, etc. My brokerage cash was in FChash until I chose SPACX as the core position. I don't see much difference between SPACX and FZFXX, the other option besides Fcash. SPAX is 5%. That's even better than my HISA at 4.5%. Does it make sense to move everything from my HISA to Fidelity and just keep it in cash in SPACs? Also, is it tax-free? High-yield savings account at minimum. Nothing wrong with keeping a liquid emergency fund of a few months' expenses. I was like OP, a significant amount sitting in savings since COVID began. I kept waiting for the bottom and missing it. Since the end of the year, I've moved over half to Fidelity, mostly in no-load NASDAQ, FNCNX, and the rest in SP500, FXAIX. Probably move the rest this week, except for a reasonable emergency fund. Fidelity also has a cash management account that works like a HISA, complete with a debit card if needed. I'm letting it build for home improvements, and it's sitting in SPACX as well. I also have Vanguard Cash Plus, emergency account, that sits at 4.7 PNC under the covers. I use the Fidelity credit card and use the cash back to buy more stocks, ETFs. It's Elon Financial under the covers. VUSX has a 5.43% yield and is mostly invested in treasuries, so that could help you avoid state taxes on profits. There's a flow chart in the sidebar of this sub for what to do you money. You'd have to post all your assets and debts if you want personal advice. This is the right answer. Follow the flow chart. Also, OP, read a great book called The Simple Path to Wealth. Sidebar, where is that on the app? Edit, NVM, reddit.com/personal finance common topics, .medium Android app, and Share found it. So where is it on the app? Deleted. I love the flowchart, our personal finance, wiki, common topics. Here's the wiki page with more context and information. I am a bot, and this action was performed automatically. Please rest message compose to Quar Personal Finance. Contact the moderators of this subreddit if you have any questions or concerns. If you may need that money in the next few years, emergency fund, down payment on house, planning major house renovations, then you do not want to put it into a risky investment. While index funds are likely to do well over a long period of time, they are not without occasional dips. And if a dip occurs right before you need the money, you lose a larger percent of your money by pulling it out when it is low. High-yield savings accounts currently will earn you around 5% a year. Otherwise, you can put some in CDs. Best to rotate them since they have to be invested for a specific amount of time. So if you were to do an 18-month CD, it might be best to invest $10 every 6 months. So every 6 months, another $10 plus interest gets released. Ladder method, I think it called, right? When one CD expires and a new one started, I like to have no more than around 12 to 15K in my checkings. Anytime it goes over it by a couple grand or more, I transfer it to my investment or HISA accounts. I'd recommend getting a HISA that can act like a checking account. Makes things far easier. I just switched my CC payments and all other transactions to be out of Wealthfront, and life is so much easier than having to transfer money all over the place. Wealthfront has made some great improvements of late. 5%, same-day transfers, etc. I've been very happy with it. The only thing I really wish is that they would post an image of the cashed check so you know your recipient received it. Both Vanguard, 4.7%, and Fidelity, 5%, have accounts that work this way. Which Fidelity account do you use this way? Could be good to know for the future. Fidelity has so many nice features, love the new Auto Invest feature, and just cannot understand why others don't do it, or why it took so long. I'm sure it's more complicated than I realize. I use mutable accounts there. Cash management allows the debit card and investment in SPACs, 5%. I also use their pre-tax HSA, the cashback credit card I use to buy stock, and a brokerage account. Cash management account here. cashmanagement.fidelity.com/spend-save/overview go sent beyond banking, card check writing bill pay, and fidelity.com/overview. Text equals beyond that on banking, card check writing, stent on bill pay. Awesome. I'll take a look at that. Yeah, HSA can't be beat. I transfer in my money from my health equity account there routinely. No fees ever at all, and no weird minimums to invest, it said. I have a cash account too, and seems my core position is something called FDIC, which pays 2.6 something. Maybe I just need to change it. I had the same thing and bought SPACSEX in that account when I learned about it. A Fidelity rep told me about it. Thanks, definitely considering that. Currently have the Betterment cash account. Didn't know the WF one can be essentially used as a checkings account. Yeah, I'm not familiar with Betterment, but the Wealthfront works well. ID moved that to a high-yield savings personally. It's not the highest, but the Apple savings account through Goldman Sachs is 4.5% right now, and you can do it in a second from your phone. I get around $150 a month just from interest having cash sitting in there. Right? I like to keep that cash in my checkings just so I don't overspend on stuff, if that makes sense. While I have a lot more in my HISA, if I cap my checkings at around 15K, I'm less tempted to buy business class tickets to the Maldives for my next vacation. I'm similar to you, but reverse strategy to achieve the same results. My checking account represents my bill/spend cash. Anything elsewhere, like savings, requires a conversation and consideration before it's used. I get my paycheck, pay the bills, and drive my checking down to $300 through movement into other accounts. Any splurge expenses that can't be covered by my next paycheck are completely out of consideration because there'll be no cash in my checking to cover it. Essentially, we force ourselves into a paycheck-to-paycheck situation to enforce frugality. To pull money out of our savings or investment accounts would take an act of God at this point, after I just had the conversation with my husband that we could retire in our 50s if we didn't touch a penny of it until then. No Maldives for us. Very interesting. Yeah, you will definitely reap the rewards much earlier with this strategy and be able to retire much earlier than the rest of us. Plus, You'll be able to easily pay for any children's tuitions if you choose to have any. Though $300 does seem a bit too close for comfort. My spouse and I have a slightly different philosophy. We've chosen to spend now and hope to increase our income as we grow older. Definitely could backfire, but just a choice we've made. And also living in NYC, it's a bit more difficult to be frugal. I did something like that too during college years to help build financial discipline. Couldn't afford to splurge. But every once in a while, would transfer some funds from savings for entertainment like bowling, movies. Depends on what kind of bank. If you're getting 4+% interest, then that's a good place to leave it. If you're getting nothing, open a high-yield savings account. I use SoFi. Free money just for leaving it in. +1 for Sophie. Their credit card is dope for 3% cashback. 2%, right? It's not that simple. Without knowing your financial situation, there is no right answer. I have way more than that sitting in the bank and I'm fine. That doesn't tell you much, does it? This answer. We can all write out a bunch of different scenarios, but without a lot more info, it's hard to give much advice. Maybe HISA is the most fitting generic answer, but not necessarily the best advice. Since then, it's just been sitting in the bank. How much is it earning? Basically nothing. That means it's losing money due to inflation. If you need it for an emergency fund, you should be trying to get at least a 4% annual return on it. If you don't need it for an emergency fund, put it in index funds so you can try and get 7% over time, or pay off loans that have high interest rates. Then it's obviously not the best place for it. Consider a high-yield savings account. Open a brokerage account at Fidelity, transfer that money to that Fidelity account. Make sure SPACX is your core position. Now you're making close to 5%. 5% of 40K is $2,000 or $166 per month. Free. You don't have to do anything. I'd at least have it in a HISA while you research and think about. Comes down to debts too. If you have debts, I'd pay those off first. Lots of savings accounts are at 5% now. You could still have it sitting around and easily available, yet earning more interest. Also, any debts at higher rates than the money is earning could be at least partially paid down. Definitely keep some liquid in case of emergency, but if you have $10 credit card debt at 15% and 40K sitting in a savings account at 5%, you're paying interest for no reason. There's always slightly better places. I'd look to learn the very basics of investing. If you have a 401k or Roth IRA, you already know about investing. But on the bright side, you have $40,000 of cash and haven't been tempted to spend it in 5 years. That's already miles ahead of most people. HISA, hello? Find a HISA. Merrill Lynch pays 4.99% on their preferred accounts. Shoot for 5% or higher. OPE. These two resources will not only help you get a clue, but you'll accelerate to confident novice. These two resources can teach you most of what you'll need to know. 1. Investopedia.com. Search for investing and retirement. 2. khanacademy.org. Do a search for investing and you'll get dozens of free courses. Does it make you comfortable knowing that you have that money sitting there? If so, it is not a waste to have it in a high-yield account. You can also do some of the other things people have suggested, but just know that it's okay to have an emergency fund in cash if that's what makes you feel safe. Do you have those saving accounts that give 5% interest? Then you are good. But if you want to invest, try join Fidelity or some solid platform. Also invest slowly, like bi-weekly or bi-weekly with same amount. Do not attempt do any FOMO or buy all in. The stress will be insane for anyone. Market right now, Watt at all-time high. Google, Money Guy, financial order of operations. Use a money market, high-yield savings, or use it to pay off loans. What kind of loans are we talking here? If you've got credit card debt or other high-interest loans, you need to deal with that. With inflation, it will lose value, so it's wise to see some investment returns, etc. HISA if you need it to be liquid. If you already have emergency, put in highest rate CD. You can probably get something around 5.5% now. Those are the conservative approaches. If you want more aggressive approach, invest in stocks, EFTs. HISA accounts pay a respectable 4+% these days for those that are very risk averse or need it to be liquid without any major tax concerns. Not that stupid. Depends on your monthly expenses. Also, think about laddering 3 to 5 month high interest rate CDs. They can't lose money and it's safe, and you can always withdraw early from them with the penalty of losing some of the interest you've earned. You could keep a chunk of it in a certificate of deposit. The rates are generally higher than a savings, but should an emergency arise, you usually only have to sacrifice interest earned to cash it out early at a credit union anyway. Roth IRA and high-yield savings account. You should work with a financial planner if you aren't comfortable opening these yourself, but they do take a small fee. Roth IRA, you can deposit up to $7,000 per year and earn 10 to 15%. You can withdraw your money, but not the interest earned without paying taxes. High-yield savings for the rest while you wait to deposit in the IRA. I've seen HSAs up to 5% interest. It works just like a regular savings account. Maybe not. If you're single, one income, you need about a year's worth of necessary expenses as an emergency fund. You don't want to have your emergency fund at risk, ever, as there's this guy named Murphy who will make the market drop just before you need the funds. To take this a little further, also remove any expected, within 2 years for this, large expenditures from risk exposure. I'm sure I'll catch some flack for this, but imagine if you've been saving for a down payment for your first house and the market takes a long dumper. How will you feel? Vanguard S&P 500 Index Fund. Put it in there and forget about it until you're ready to retire. Unless you're carrying credit card debt, then pay that off first and invest the rest in the Vanguard Fund. I was the exact same situation. Minimal debt and $40 in checking. Just opened up a HISA with Wealthfront and getting 5% APR. Gonna use that money to buy a hose, so don't want to put into market, but also don't want it just sitting there. Ally High Yield Savings at a minimum can open up their checking too and transfer there if you need to ever spend in emergency. Well, since you didn't need the money, you should have invested it 5 years ago. It would have not quite doubled. Barring that, 5 years ago savings rates were low. They went high during 2022. If those $40 had been in a HISA during 2023, that would have been $2 profit before taxes. The community information of this sub has an awesome wiki with all the information you could wish for in an easily accessible format. At the very least, if you are in the US, make sure you max out both your Roth IRA before tax day in April. Here's a strong R personal finance wiki's link to the PF Wiki Strong for helpful guides and information. I am a bot and this action was performed automatically. Please message composed to =r/personal finance. Contact the moderators of this subreddit if you have any questions or concerns. Nowhere near enough info to answer. Everyone keeps mentioning high-yield savings accounts like it's nothing. Chase Savings is like 0.01%. Where are these accounts that are safe? I have read nothing but bad reviews about Ally and similar banks. Discover Bank. Amex HISA is 4.35%. Takes about 10 mins to sign up. I've had Ally Bank for years and nothing bad to say, getting like 4.5% on savings. My savings is in the Amex HISA. It's not 5%, but 4% is certainly better than BOA, Chase, Wells Fargo, etc. I used Ally in college, and they were one of the pioneers of online bank. No physical locations, less overhead, better rates. No real problems, but didn't have much in there. I've also used credit unions too. As for HISA, I would consider something from a more well-known bank. Safe in what sense? HISA or FDIC insured. At the least, a high-yield savings account would be good. I'm getting about 5%.